Okay, let's jump over to the Winning at Life hotline. We have Karen from Wallace joining the show. How can we help you today, Karen?
Hi, good morning. I'm a state employee, and I was putting away like $500 a month in my 457 account. But since the stock market is like kind of going down, I've reduced it to like $50 just to keep it going. Would that be something smart to do, like not contribute as much as you can at this time and kind of like reduce it down?
Let's look at it this way. How much longer do you plan to work before you retire?
Another 12 years.
Okay, there's an important concept here of dollar cost averaging. And, you know, the markets do go up and down. So of this money that you're putting into the 457 plan, just give me kind of an idea of what the investment selections that you're using inside of that plan.
Well, I kind of choose them myself. I have maybe like 50% in a stable account, and then the other 50% I have like maybe 25 in bonds and another 25 in like international accounts.
Okay. When you say national account, is that stocks?
Yeah, it's stocks, like international stocks.
Okay. So half of your money is very conservative. That's stable value. That's kind of like a money market account. You have some bonds being held. I'm thinking I would reduce those bonds. Now, on the national account or stock type of account, I believe you mentioned there, I would tend to want to make sure I probably have something like, for example, the S&P 500 there. So I've got diversification, because when we're going to have interest rates moving up for a while. So that can be a negative impact on the bond portion. Your stable value, that money market just really doesn't have any risk. Your risk on that account, honestly, Karen, is inflation, because yield is low on those and they're not going up. So you kind of have some risk there. But when you kind of look at the stock market being down this week, and it's down about 13% for the year, the S&P 500. So it is down. But what that also, if you look at it this way, Karen, it's kind of being discounted, because what history tells us is it is going to move back up. That's what it has done historically. We have ups and we have downs, and there's no straight line to it, or almost straight line. There's periods where you look at a chart, you see the pullbacks, but those pullbacks historically, you look back and it's like, gosh, that was opportunity. Oh, there's another opportunity there. And you're looking 12 years ahead. Let me just point that out. You've got 12 more years. I think you should be putting that $500 a month in. I want your habit to stay at that, not get used to the 50 and the extra money. You're going to need this money in the future.
No, I was just going to do like 50 for maybe the summer, and then put it back to like 500 in like say September or whatever. I just didn't know if I just felt like I was wasting money with the possibility of losing it. So I'm guessing what you're saying is start back with the 500, but just change my investment.
Yeah, and you're already very conservative, so I'm not going to have you change that mix, but I would look at those, maybe shift that bonds and get a little bit more to the longer view, but make sure I'm utilizing something like an S&P 500 choice in there, and that gives you a lot of diversification, but we're looking 12 years down the road. Things are going to get better. It's going to go back up. It doesn't historically stay down and ugly, and that's kind of our view is, oh my gosh, I'm losing some of my money. But you're also looking at it's discounted. I can keep some going in, and once again, 50% of that money you're putting in is going to that money market. there. And I'm not going to
Okay.
advise you to shift that because there's another conversation that you should have. And our team helps people with a 401k analyzer is what we call it, but that helps people with 403b, 457s, qualified accounts in helping you with investment choices inside of those plans, subject to what your risk and your goals are in the future. And our system can kind of go in there and help you rebalance with those choices, kind of take that off of you. So don't look at the short term, look at the long term. And that's something you could reach out to my office and we can talk about that, helping you further with that. But yeah, I think you should put that $500 a month in without taking a break from that. Hopefully this helps you, Karen. Thank you for listening to Winning at Home and calling into the